Okay, good day, students. Welcome to your lecture on topic 2.1. My name is Tsepo Diale. I'm one of your lecturers. I'm also joined by Mrs. Shan Malan. She will be looking at some of the questions that you pose. So feel free at the bottom or on the right to put any questions you have um, during this live broadcast, and I'm going to do my best to deal with them before the end of the broadcast. The broadcast should be approximately 30 minutes. Okay. Okay, so here's our roadmap, what we're going to be dealing with today. Topic 2.1 is your Bible for substantive procedures. The principles or the generic principles for substantive procedures are in topic 2.1, and then you apply those principles in the different learning units in topic 3. Today we're going to deal with what are assertions. Then we're going to talk about what are substantive procedures. We'll discuss the different types of substantive procedures. There are two. We'll talk a little bit about when do we perform substantive procedures. And then lastly, we'll give a few examples of substantive procedures that address occurrence and existence, and that address accuracy and valuation. Okay, so let's begin with what are assertions. Management prepares the fund. Once these financial statements are prepared, they are then given to the auditor to audit. And we audit based on assertions. So it's important to know what are assertions. When management gives the financial statements to us as auditors, and management prepares the financial statements on behalf for their investors, they are saying a few things in those financial statements. For example, in the income statement, which is our statement of comprehensive income, we have a lot of different line items. When management gives the financial statements to us, they are saying that revenue is complete. Okay. They are also saying to us that revenue, all the transactions in the revenue account have occurred. Okay. They are saying that those transactions relating to revenue are relating to our current period. Okay. They are saying that those amounts relating to revenue are in fact revenue and not other income or anything else, and that's called classification. They are saying that those amounts relating to revenue are presented correctly, that the amounts relating to revenue have been disclosed the way they're supposed to be disclosed. They are also saying that those amounts relating to revenue have been calculated correctly. Okay. So those are what our assumptions are. They are claims made by management. Okay. And for our statement of comprehensive income, they relate to all line items. So whether it's cost of sales, whether it's operating expenses, whatever the transactions are, whatever those classes of transactions are. Okay, so you can think of classes of transactions as those that are relating to the statement of comprehensive income, which is your old income statement. Yeah. Yeah. Just also note that I made the example from revenue, but it also applies to cost of sales. It applies to any line item. Any line item on your income statement. Okay. Those are not the only assertions made by management. We also have our statement of financial position, what is also known as our balance sheet. And management assertions about those as well. They make, for example, our property, plant, and equipment. Okay. When that amount of 5895 is put in the financial statement by management, it is saying that that amount is complete. Okay. Okay. So completeness. Okay. For a balance that is on our statement of financial position, we do not say that it has occurred. We say that it exists because our balance sheet is as at a specific date. For example, 31 December. Okay. So the assertion would not be occurrence, but it would be existence. Does the balance exist at year end? Yeah. It's very different from our statement of comprehensive income, which is for the year. It's for the full financial year. It would start in Jan, end in December. So you'd want to know, did those transactions occur? Whereas with our statement of financial position is that at a specific date, 31st of December as an example, therefore the balances in there, you'd want to know whether they do in fact exist. On equipment amount of 5895, does it relate to the period as in cutoff? That would not be applicable because our date is 31st of December. So cutoff wouldn't be an assertion for account balances. Okay. Classification, yes, that would be applicable because it's important for us to know whether PPE is correctly classified as PPE or whether it should have been something else. Classification. Look at me spelling it incorrectly. Okay. Classification. Okay. When management prepares the statement of financial position for property, plant, and equipment, they are asserting that the amounts are accurately valued, accuracy, valuation, and allocation. Okay. Allocation. This is also different from our statement of comprehensive income because our balance sheet values aren't just one transaction amount. So for class of transactions, you'd want to know that that transaction is accurately calculated. But for our balances, you'd want to know whether the amount is correctly valued. For example, you'd want to know that the amount for instance, inventory should be valued at the lower of net realizable value and cost. So you'd want to see that that has been adhered to. So you have completeness, existence, classification, accuracy, valuation, and allocation. Okay. Management also asserts that the rights and obligations relate to the company at hand. Right? And then also, we also have presentation. Okay, I'm going to put presentation up here. Okay. So just a short recap of what we're saying in the slide. We are saying that there is two categories of assertions. What are assertions? Assertions are those claims that management makes in preparing those financial statements. In preparing those financial statements, management claims that the amounts in the statement of comprehensive income are complete, they have occurred, they relate to the correct period being cut off, they've been classified correctly, they are accurate, and they've been presented adequately. Those are the claims when transactions have been recorded in the statement of comprehensive income. There's another category of assertions called account balances, and those are the claims that management makes about the balances in the statement of financial position. And those claims are that those balances are complete, they exist as at year end, they've been presented adequately, they've been classified correctly, they are accurately valued and allocated, and then that the rights and obligations belong to that entity. It's very important for you to understand the differences between the two categories of assertions and what each and every single assertion is trying to achieve. Okay. Okay, we have a question, so I'm going to deal with that one now. Okay. So, okay. Yes. Okay, so we have a question from Rena, and Rena is asking, what if you are given a trial balance? How do the assertions fit in when you are given a trial balance? Now, typically, a trial balance would look something like this. Okay, typically a trial balance would look something like this. You will have a trial balance as at some date. So it'll be as at 31 December. It will have a certain general ledger account. And then it'll have the amount as at that date. So for example, you can have revenue, you can have cost of sales, you can have, let's say, equipment, at cost, and then you'll have another equipment accumulated depreciation. Depreciation. And then you'll have whatever the amounts are. So I'm just going to put amounts in. 500 for revenue, 250 cost of sales, equipment at cost I'm going to put at 10,000, and then accumulated I'm going to put at 4. This is 10,000. This is going to be 4,000. Revenue is obviously a credit, cost of sales is obviously a debit, equipment at cost is a debit, and accumulated is a credit. So if you're looking at a trial balance, you want to know which assertions would be applicable for what? The first question you'd be asking yourself is, do these accounts relate to the statement of comprehensive income, or do they relate to the statement of financial position? That's your first question, because that's what determines what category of assertions will be applied. If we look at the first one, revenue on the trial balance, that will be relating to the statement of comprehensive income. If that's relating to the statement of comprehensive income, then you know that you must apply the assertions that we've detailed here, which is completeness, occurrence, cutoff, classification, accuracy, and presentation. Second line item on our trial balance is cost of sales. Is that statement of comprehensive income or statement of financial position? That is the statement of comprehensive income. So again, you would apply the same assertions for cost of sales that you would apply for revenue. Equipment at cost. Equipment, statement of financial position or statement of comprehensive income account. It is obviously a statement of financial position account. And because of the statement of financial position account, you will then apply account balance assertions, which are completeness, existence, presentation, classification, accuracy, valuation, and allocation, and rights and obligations. Yeah. And then equipment accumulated depreciation. What account is that? Statement of comprehensive income or statement of financial position? That is a statement of financial position account. Okay, so you apply the same assertions that you applied for equipment at cost. I hope that answers your question, Rina. Okay. So now that we know what assertions are, we now need to know now that we know what the assertions are, we're now going to discuss what are substantive procedures. Okay. So we have said that our assertions are what the management claims, is what management claims about the financial statements. What our substantive procedures are there to do is to address all these assertions that we have now identified. Okay, so this slide is not showing 100% like it should, but I will just write everything. Yeah. So we have our assertions here, which are our classes of transactions assertions. Okay. We have our classes of transactions assertions. We have just discussed all of those now, so you know those 6. And then we also have our account balance assertions. There are 6 of those as well. Okay. It's not the same 6, but you know that by now. So our substantive procedures are those procedures that we perform in order to cover all these assertions. So our substantive procedures are the procedures we perform to cover our assertions. Okay. Okay, so what does that mean? Whatever procedure we would perform in order to address the completeness of revenue, that would be a substantive procedure. Whatever procedure we would perform to address the occurrence of revenue. That would be a substantive procedure. Okay. So I hope you see the link between management, what assertions are, and what substantive procedures are. There are two types of substantive procedures. So you don't want to confuse the assertions and the substantive procedures. Two categories of assertions, two types of substantive procedures. And we talk about them in your study guide. Okay. Substantive procedures, what we say here, substantive procedures branch out into two components, namely tests of detail, okay, and analytical procedures. Okay. So that's very important. Whenever we're asking you to give us substantive procedures, we are obviously talking about tests of detail and analytical procedures, because that's what makes up substantive procedures. An example of tests of detail would be an example for tests of details would be when you are looking at your invoice. Okay. Okay. So if you take a revenue transaction from the GL and agree it to the amount that's on the invoice, you are looking at the detail of the transaction. And that's what tests of details are. You're looking at the detail of the transactions. Analytical procedures are where there is a relationship between two variables and you want to test that relationship. So you will do a calculation to test that relationship. An example of an analytical procedure is to compare last year's revenue amount to this year's revenue amount. And if there's a big difference, if there's a big fluctuation, you can follow up with management as to why there's been a big fluctuation. Yeah? So analytical procedures are very good at picking up, at addressing completeness. Because if you think about it, if revenue last year was 19 million and revenue this year is 1 million, immediately you will notice that there is a problem. Okay, and this is when you'll go to management and inquire as to why there's been such a big fluctuation. Okay, so they're very good at addressing completeness, but they also address many assertions, but they're particularly good at addressing completeness. Yeah. I hope the distinction between tests of detail and analytical procedures is clear. Let us know if it's not. Analytical procedures are then covered in topic 2.3, so they're not the subject of today's lecture. Yeah. Then, when do we perform substantive procedures? I put this here for everyone to go through. This is also from AUE3701. So it's for completeness. You must go and you must read about the nature, timing, and extent of substantive procedures. Yeah. Then I'm just going to do a short example on tests of detail to address the occurrence and the existence assertions. Like we said, occurrence relates to classes of transactions. Which is the statement of comprehensive income, while existence relates to account balances. Which is your statement of financial position. So we're just going to discuss what it means when we say we're trying to address the occurrence of something. When we're trying to address the occurrence of something, it means, did it actually happen? Okay. Did that transaction occur? Yeah. Okay. Has the transaction occurred? Okay. Whereas with existence, we're saying, does the balance exist at a particular date? So at our year end, at our reporting date, does that balance exist? With occurrence, we're saying, has the transaction occurred? So we're looking back at the period that's part of our statement of comprehensive income, the year that's part of our statement of comprehensive income, whereas with existence, we're looking at a specific date, whatever is our statement of financial position date, our reporting date, does our balance exist as at that date? Okay. So with existence and account balances, we're talking about things like receivables, okay, things like inventory, and so on and so forth. Okay. Liabilities as well are included there. Okay. A very important part of whether something exists or not is whether it has been authorized or approved. Okay. Okay. So it's very important that when you think of existence, whether something exists as a particular date or not, also look at its authorization or its approval. And authorization or approval is usually based on the minutes of meetings. Yeah. But a lot of students overlook the authorization and the approval aspect relating to account balances. What I would also suggest is that you do a comparison that if you go assertion by assertion, so if you go existence and then you go to every single topic for existence. So you go to our inventory, you go to our salaries and payroll, and you go to our finance and investment cycle, and you look at the substantive procedures that are performed to address existence. There are a lot of similarities between the different cycles. This is now when relating to topic 3. So you want to look at all of them side by side and look at the similarities between the cycles, so that you don't end up memorizing substantive procedures, because there's no need. Just go and compare. You will see there are already a lot of similarities. Yeah. And it's a similar thing as well with regards to the comparison for classes of transactions. Okay. So occurrence for revenue, occurrence for our wages and salaries expense, occurrence for things like our cost of sales expense. They are very, very, very similar procedures, and you just need to go and compare all our cycles. All right. There will be a video relating to this later on. So right now, I just want you to go and do the comparison yourself and see, and then compare to the video that we do later on. Okay. Substantive procedures regarding to address accuracy, and then valuation. Okay. Okay. Accuracy, like the one we've just discussed now, that lays the statement of comprehensive income. Therefore, it's classes of transactions. Okay. The full name here is accuracy, valuation, and allocation. Okay. That relates to the statement of financial position, and therefore our categories of assertions is account balances. Okay. In the previous slide, I asked you to go and do a comparison for occurrence and existence. So here's me giving you an example of how to do that comparison. Yeah. Valuation is it's an accounting concept. Yeah. So if you think of our cycles, we have our let me use another color. Okay. These are our cycles. Some of our cycles. We have inventory. Okay. We have revenue and receipts. Okay. Okay. We have our acquisition and payments. We have our payroll cycle. And there's another one. I'll remember now. Okay. So these are our cycles. And we're going to do a comparison. Okay. For valuation, okay, how are amounts valued? For example, if we're dealing with payroll, the valuation for payroll will start off with your gross amount, less deductions, equals net pay. Okay. So how would we address this? The gross amount, our gross amount for payroll, you'd obviously get from your employee's contract. Okay. Our deductions would be from SARS tax tables. So you would agree that to SARS tables, deduction tables. Okay. And then our net pay, you'd want to see that the gross amount less deductions is in fact equal to the net pay. So our net pay would be a recalculation. Okay. Yeah. Now compare this to inventory. Compare this to our inventory. Inventory. Okay. Our amount for inventory, our gross amount would always be our cost. And depending on whether cost or net realizable value is lower, you would have your write-off, and then the net amount would be net realizable value, NRV. And how would our procedures affect this? Our costs, we'd agreed to a supporting documentation, being whatever invoice you bought, whatever invoice you received upon buying the goods. The write-off would be a recalculation and agreeing to the policy of the entity. And then our net realizable value would be a recalculation. It would recalculate to check that the cost less the write-off is in fact equal to NRV. So by comparing these two cycles, you see that there's a few similarities already. That the gross amount for payroll and the cost for inventory are both agreed to supporting documentation. The deductions for payroll and the write-off for inventory both involve recalculations. The net pay for payroll and the net realizable value both involve a recalculation. Okay. Also do it for PPE. Okay. In our finance and investment cycle. Oh, that was the cycle missing here, our finance and investment cycle. Investment cycle. Okay. PPE, our gross value is cost. Okay. How do you say that? This accumulated is equal to our can't see anything. Okay. So our cost less our accumulated will give you carrying value. Okay. How would we agree our cost? Our cost would be agreed to the invoice received upon purchasing the PPE. Our accumulator would be agreed to the policy, and it would involve a recalculation. Our net amount, being the carrying value, would also involve a recalculation to check that in fact our cost less our accumulated does equal our carrying amount. So if you see things side by side, if you do a comparison, you're actually able to see that there are many similarities that exist and that make it easier for you, that you don't need to go and cram anything. It just comes from understanding. Okay, so that's regarding accuracy, valuation, and allocation. It's regarding our statement of financial position. It's regarding our account balances. Okay. Regarding accuracy, which is relating to our statement of comprehensive income, which means our classes of transactions. An example would be revenue. And that one is a really easy one because that just involves, recalculations. It involves a lot of recalculations relating to, our invoices. Okay. I hope this has cleared up a lot of things regarding assertions, regarding what substantive procedures are, and regarding just general understanding of all of these. If there are any questions, you're free to pose them now, and you're also free to email us at AUE3702@junisa.ac.za. Please give us feedback regarding how you're finding these videos so that we can know if they are helping you, and if there should be less or there should be more, or what is the case. And I'll try to make my writing more readable the next time. Thank you. There is a question.
It's about assignment 2, and it's on how they go about marking their own work and how they complete it. There is a bit of confusion over that and what we expect from them.
Okay.
We've got 2 queries about that.
Okay. So it seems like there's something. So regarding assignment 2, there's questions about assignment 2, and it's about how to mark yourself, and maybe also what we expect from you for assignment 2. I'm sure you would have seen the announcement by now that assignment 2, we will only be marking topics 2 and 3 from assignment 2, and activity 0.1. We do not expect you to submit topic 4 if you have time limitations, okay? But if you do have the time, it would be great. It's for your benefit that you also go through topic 4. Regarding how to mark yourself, there's several ways, and also remember that marking yourself is only required for self-reflection activities. It's not required for all activities, so you just look out for where it says self-reflection activity, and it's usually the ones where there's answers, not all of them. And the way that you can mark yourself is there's a few ways. You can either every time after you have written an answer. So let's say you said you wrote your substantive procedure, which included the how, the what, and the why. Okay, you've attempted the question. You've written all your substantive procedures, which include how, what, and why, and then now you are marking yourself by comparing it to the solution in the study guide. You can either do it manually, so in other words, you've written it manually, and you can tick for yourself whether it's right or wrong as compared to the solution in the study guide. Or if you are typing it, you can just, in brackets, just put there right, or just put in brackets wrong. Okay, you can do that, write it in. Another thing that students also do is to change the font. So if you change your font when you're marking, if you change your font to Webdings, and an A will equal a tick in Webdings, okay, and an R will equal a cross in Webdings. So, those are your options. You can either write right or wrong. You can change the font to Webdings, or you can, if you've written it out physically, you can just make a tick. What's also supposed to happen after you've marked yourself, you must also give yourself a total. So if there's 10 answers in the solution, and you have 5 right, give yourself a total 5 out of 10. Okay, so mark yourself number 1. Okay, give yourself a total number 2, and then lastly, you want to write a self-reflection. Okay, This self-reflection is for you to write down whatever it is you have learned from doing that activity. Sometimes you do an activity and there were a lot of things missing from your solution. So if there were a lot of things missing from your solution, it's you're supposed to self-reflect on why. Why would those things be missing from your solution? And also the other way around. Sometimes your answer could be twice as long as the solution. And in your self-reflection, state why did you include so many answers? What is it that you were what is it that you thought that you were wrong in thinking? It's very important to do a self-reflection because it tells you how you think, and in that way you can learn the right way. Yeah. So that's our expectations in terms of marking yourself for assignment 2. If you want to know more information about assignment 2, I did post a very long post in the discussion groups that details a few things about assignment 2, and you can also email us in the module mailbox AUE3702. And it seems like that's it. So thank you very much for joining us. And like I said, please remember to comment on how you found this broadcast.